Our next topic of discussion is alternative minimum tax, which is covered in your total income and tax payable chapter. Actually, I was supposed to consider one of the 5 heads of income after capital gains, what was dealt last, but our friend Kamalesh wants us to discuss on AMT. So I've covered this 10 or 15 minutes of video about alternative minimum tax. So first, what is alternative minimum tax? And how is it calculated, and what are the applicability, like what are the assessees it is applicable to? There is yet another concept which is same as alternative minimum tax, AMT, which is MAT. There is minimum alternative tax applicable for companies. AMT is applicable for assessees other than companies, and MAT is applicable for companies. However, MAT is not covered under inter chapters. Our level of understanding is that is confined only to AMT. So MAT is not going to be covered in this chapter as it is not applicable for the exam perspective. And first, so is it applicable to all the assessees other than company? There is a threshold available. So for individual, HUF, AOP, BOI, AJP. So for these 5 types of assessee alone, if the adjusted total income is less than 20 lakhs, then it's not applicable. However, for say firm, that is as this AMT is applicable to any other form of assessee other than company, even for firm it will be applicable. However, for firm there is no minimum threshold applicable, so any amount will be subject to AMT. We have to put the AMT into check. So first, what is adjusted total income? Based on our knowledge from other chapters, we can now compute total income. So what is this adjusted total income? Total income adjusted for deductions claim under section 10AA, section 35AD, chapter 6A, heading C. So what is this part C of chapter 6A? It is deduction in respect of certain income. So if you recollect, when we read the deductions available under chapter 6A, there are 2 kinds of deductions available. Say one is like deduction in respect of certain investments. For example, ATC, where you get for deposits in fixed deposit, if it's 5-year fixed deposits, then we'll get deduction under ATC. Whereas there are few other chapters based on our income, we'll have deduction under chapter 6A. Say 80 TTA, where bank interest. So when there is a bank interest income, deduction under chapter 6A will be available. However, if you see this, section 35 has a 35 AD deduction has a condition. We'll have to add back this 35 AD deduction, whatever was claimed, and deduct section 32 depreciation applicable on this amount. So we'll have a better clarity when we see an example based on this. So now the example, Mr. X, an individual, set up a unit in SEZ in the financial year 15-16 for the production of washing machines. The unit fulfills all the conditions of section 10AA of the Income Tax Act. During the financial year 18-19, he has also set up a warehousing facility in a district of Tamil Nadu for storage of agricultural produce. So now that we have the 35 AD, we have two types of deduction, both 10AA and 35 AD. So the first point to be noted in any question is that see the nature of assessee. Here it's an individual. To check if they have asked to compute as income tax. Yes, they have asked us to compute. If you see in this particular example, they have told that including AMT under section 115 JSC. If in case this is not included, please calculate if it's applicable to the scenario. Say an individual having a total income of more than 20 lakhs is there in the scenario. He has deduction under any of these 3 chapters or any these 3 deductions available. Then please compute AMT even if it's not specifically mentioned. There might be marks allocated for that also. So check for the conditions. So for computing AMT also, you should have a good grip on 10AA and 35 AD. So if we see here, how are we going to move forward? So I guess all are aware of 35 AD deductions, capital expenditure, even pre-setting up it's available. Specified business only is available. However, any cost spent on land is not available. That is why they have given a specific amount in the, within brackets, including cost of land for 10 lakhs has been mentioned. So we'll have to make a note that this should be reduced while computing the total 35 AD deductions available. So now, and the warehouse expenditure has become from 2019, an expenditure of 75 lakhs was computed. So if you see here, I'll tell you how it is to be computed. So on checking how to answer the question, we'll now see the format generally we follow. We'll have to mention the assessee name, assessment year, previous year. So here the question deals about computation of income tax payable. After having mentioned all these basic details, we'll first compute income tax payable as per the general provisions. So first, provisions are like profit from cess unit and deductions available under 10A. So we are aware how to compute the deduction available under 10(2)A. Please remember to mention note for every workings you have. So here 32 lakhs based on a working. So have a separate note and do not just mention numbers like this. Just to show you the calculation, I have just mentioned the numbers. However, please, if there is a formula or anything available for any specific question you're going to deal with, please mention. So here profits available into export turnover from the cess unit divided by the total turnover. So if you have any specific format or any specific formula with which you deal the answer with, please write that also in your notes. And the second part of the question is about warehousing facility where 35 AD is available. So here we have considered 65 lakhs. However, total expenditure is 75 lakhs. Why is this 10 lakhs ineligible? Because it is purchase of land. So have a detailed mention about this on your notes. First write what is 35 AD available for and why in this case you have applied that and why 10 lakhs is not taken into consideration for the answer. Now, after having calculated the total income of 48 lakhs, we have calculated the tax liability based on the normal slabs. So as I mentioned earlier, in this case, no surcharge is available as the income is less than 48 lakhs. So remember this point of surcharge because you tend to forget it after having noted the total income. Wherever the total income exceeds 50 lakhs, have a check for surcharge and marginal relief, if any, is available against such surcharge paid. So now we are going to calculate adjusted total income. So here I have not drawn boxes. Please be specific about the format you are following. So this will be the particulars column. Here again we'll have one more amount in rupees. Again, this will be a separate final amount rupees column. So here what we have done is calculated the total income. As I mentioned before, for the amount of deductions available under 35 AD, first we'll add back both 10A and 35 AD. However, any capital expenditure that has been allowed under 35 AD will be added back, and any depreciation allowable on under 32 on that specific asset should be allowed for calculating adjusted total income. For your normal calculations, this was not considered because once you take deduction under 35 AD on the same asset, 32 section 32 depreciation cannot be considered. Remember this point for adjusted total income, add back 35 AD, the total capital expenditure incurred by the assessee, and you have the concession of deducting depreciation under section 32 for this. So here, since it's a building, 10% on the total amount of expenditure has been claimed as a deduction now. So it's 6,50,000. So now we know who is applicable, on whose income AMT is applicable, and what is adjusted total income. So what is the rate of AMT? It's 18.5%. On that, now if you see However, on total income as per normal provisions, there was no surcharge available applicable since the income was less than 50 lakhs. However, having added back the 10 AA deduction and 35 AD deduction, the income has now raised to an effect of 1 crore 38 lakh 50,000. So now surcharge will be applicable at 15% since it's over 1 crore and less than 2 crores. So on that income, now we'll compute AMT, surcharge and health education cess. So which totals up to 30 lakh 64,451. So now, under what provision should the assessee pay the total tax payable? If you see, as per normal provisions, it's only 13 lakh 2,600. However, if you see, as per AMT, it's 30 lakh 64,000. So what is the tax payable? It is the higher of two. Therefore, now the assessee has to pay 30, 64, 451. So why should an assessee pay? Like, does he have any other benefit of paying the higher tax? Though deduction has been provided by the income tax, and the income tax says that you are eligible to claim. However, again they are asking you to pay an adjusted, compute an adjusted total income and asking you to pay an higher tax liability. So how is this dealt with in the further years? Now we have an AMT credit of the differential amount, higher amount paid, that is 30 lakh 64,451 minus 13 lakh 2,600. Whatever is paid can be taken as an AMT credit for next 15 years. This can be carried forward to further 15 years in our income tax rate. So now, if you see, for this question, almost 17 lakhs an odd amount will be available as MAT credit for the assessee in the future years, up to 15 years if the return of income is filed within due date. So, is the amount available totally for the each year? Say next year, the total tax payable is 40 lakhs. Can the assessee claim the entire 30 lakhs? No, there are few restrictions on that also. However, it is not relevant for our examinations. So we will now stop our discussions with the point that MAT credit or AMT credit, alternative minimum tax credit for assessees other than companies, whichever is being paid in the current year, is available as credit for next 15 years against any tax payable. So now this is calculated after taking credit of any TDS or advance tax, TCS payable or any relief available under the section. Now the final point to be considered is that there is a credit available. You have paid as per AMT in a previous year and you have an alternative minimum tax credit available in your account. So can this be claimed if in a specific future year or next assessment year for the individual, the total income or the adjusted total income is less than 20 lakhs. Do you apply this AMT credit? Yes, it is applicable. Only for checking the AMT payable condition, 20 lakhs should be applicable. However, if you are paying your tax as per normal income tax provisions, even if your income is less than 20 lakhs, this MAT credit or AMT credit is available for adjustment in the subsequent years. Thank you.